Imagine this. The U.S. is going to war with Iran, and instead of destruction, it creates millionaires. Sounds crazy? I agree with you. A lot of people on YouTube are saying that this event will create millionaires, and I think it could if several things happen along the line and you act appropriately. Politicians are often quoted as saying, "Don't let a good crisis go to waste." In investing, Warren Buffett is often quoted as saying, "Be fearful when others are greedy and greedy when others are fearful." The most overused, besides moat, of all the saying. And a lot of investors right now are concerned with how to navigate this market because of this potential war with Iran. And you might be asking questions like, should I sell my stocks? Should I buy some stocks? Should I wait to buy stocks? And how do I spot opportunities and take advantage of them? If you're new to investing, this is a moment to learn something very powerful. Real world events, especially scary ones, can create some of the best opportunities in the market. Whenever there's geopolitical chaos, like war threats or conflict, investors panic. But that panic causes prices to move fast, and not always logically. Look at today. Today's June 23rd, and we just bombed Iran this weekend. NASDAQ's up 0.5%, Dow is up 0.4%, S&P is up over 0.5%. Does that make any sense? Mo, when you first saw that Trump sat there and bombed Iran, 3 major nuclear sites, what did you think?
Markets are going to tank.
Market's going to tank, and oil prices will skyrocket.
Yeah.
And temporarily, they did.
Temporarily for like a couple hours.
And then you look at it and go, wait, what is happening here? And we've seen this the last couple times. Israel and Iran going to war. All these things are like, oh, this is going to be
Ukraine.
Russia and
That was
Ukraine.
supposed to be the end of it.
Yeah, it was going to be, this is it.
Yeah.
And now all of a sudden, what do we have? We have higher markets. Smart investors don't watch the news, guys. They ask, what does this mean for supply and demand? But even more importantly is, what does it mean in the long run for supply and demand? Guys, oil probably will skyrocket because if this battle is ongoing. But in the long run, what's going to happen to oil prices? What the fundamentals will drive? Do you remember what happened to oil prices in the Gulf War? Guess what? Neither do I. And I was born in Iraq. It was my country being attacked, and I have no idea what happened to oil prices because that was 35 years ago. But what I do remember, what I do know is that right now, oil prices are around $75 or $80 a barrel. And over time, as we use more and more products, as we create more and more machinery, that will likely lead to an increase in demand. So if we can't supply more, then prices will go up. So temporarily, here are the opportunities for you. If there is a long, drawn-out war, look what happened to the Strait of Hormuz, but I just called Hormozy because of Alex Hormozy. So Iran came out and said, we're going to shut this off. What do you think?
That's the biggest threat that they had.
Yeah.
They were going to shut down the Strait of Hormuz. They are not going to.
What percentage of the world's oil goes to that Strait of Hormuz? It's something absurd, like 25, 30%, or maybe even higher. I have no idea.
I think it might be a bit higher than that, but then you start looking and saying, okay, who would this really affect? Well, it really wouldn't affect the United States because it's like 4% of our oil that comes from there.
Okay.
But it would shut down Iran's economy.
Yeah, they're
And
100%
China
reliant.
would be screwed, and it seems like they're more aligned with China than the United States because we just hit them. But
Iran's entire GDP
it's based on that.
is based on oil prices.
And it's based on the Strait of Hormuz.
So if they want to sit there and F with that, then, hey,
it.
if you guys are going to enter in a long, drawn-out war, here's one thing I do know you need. Money.
Yep.
So if you need money, that money needs to be coming in. Now, another drawn-out thing, defense contractors, right? Because if we go to battle, if we go to war, then we're going to be buying a lot of machinery, we're going to be buying a lot of weapons. Defense companies will win too. Governments are going to spend more on weapons and tech. Now look at gold and silver. Gold is the traditional fear hedge, and it's already been on a rip with the stock market volatility this year. By the way, I'm going to interject here. Remember how Bitcoin was the safe haven?
I think it still is, right?
And the war, and we bombed, and then all of a sudden, it went down.
That's weird.
But when the NASDAQ went up a ton, what happened to Bitcoin? It went up a ton. Guys, Bitcoin is a tech play, pure and simple. It's a purely speculative tech play. In fact, I finally had somebody on Twitter write me a message and say, you know what? It is a tech play. I'm like, thank you. I got one person to acknowledge the fact that it's a tech play. Wow. Guys, anytime there's tight supply and demand and a shock to it, prices will spike.
Yeah.
A perceived shock to it. We don't know what's going to end up happening here. This could be a major opportunity in oil. But you got to remember one thing about oil and commodities-based businesses. You can't go based on short-term results. You got to look at the long run. You got to look at their long-term results. So guys, this is Occidental Petroleum, the one that Warren Buffett loves. Mo, look at this revenue here. Look at the revenue by year. 12.5 billion, 10 billion, 12.5 billion, 17.8, 20.9, 17.8, 26, 36, 28, 26, 27.5. All over the board.
All over.
You know what's going to end up happening? You look at oil prices, my guess is it's going to go there. Let's see what the profit looks like by year. Negative 7.8 billion, negative half a billion, 1.3, 4 billion, negative 667, a negative 14.8, positive 2.3, 13.3. Here's my point. If you bought based on this,
Yeah.
what happened to you?
You got smoked.
Yeah, if you bought based on the absolute best, if you ignored based on the absolute worst, you probably missed out on an opportunity. So when it comes to oil companies and companies that their money is made from commodities, you got to remember, commodities are very volatile. You've got to look at a long-term approach and say, okay, over the last 5 or 10 years, where has that commodities price gone? Where has this company gone revenue-wise? Where has their profit been? Smart companies like this will do the right things during bad times and the really right things during good times. Right after the U.S. struck these Iranian nuclear sites, oil prices jumped 5 or 6%. They hit about $78, $79, and some of the highest levels we've seen in months. Why? Because of that Strait of Hormuz we're talking about. It controls 20 to 30% of the world's oil. That puts it at risk. Iran has said that they may close traffic to ships. But like we talked about here, it's perception versus reality. We don't know what the reality is going to be. Mo and I, two Middle Eastern guys who know nothing about the Middle East apart from the fact that our parents are from there, so we have no expertise whatsoever. Just think logically. But then again, are they logical there?
No
one
comment.
Yeah, well, that's the thing. Like, it's funny we talk about this, and I'm going to go back to college here in a story that I had in college. I remember being from Iraq, and they were trying to overthrow Saddam Hussein. And of course, my bias was, get this guy to power. And somebody said, well, Paul, he's going to be a rational leader. I'm like, really? Because after the Gulf War, he literally tried to assassinate former President George H.W. Bush. Is that a rational decision?
I don't think it's rational.
If he had successfully done that, what would the U.S. have done? What would Bill Clinton and the U.S. have done?
Destroyed them.
They would have absolutely destroyed him. He'd have been dead.
Yeah.
And you're telling me he doesn't know that? Of course. So it's hard to sit there and worry about the rational behavior of crazy people. So another story back in 1973. The oil producers in the Middle East launched an embargo against the U.S. and others backing Israel. Oil prices quadrupled. They jumped from $3 to $12 per barrel. Gas shortages and long lines followed, kicking off a major recession. Guys, we saw that inflation from 1973 to 1982, 83. We had to jack up rates to 15 to 18%.
Yeah. Do you remember the movie Miracle?
I never saw it.
Never seen that movie?
No, the one with the ice hockey thing? Yeah, I never saw
There's
it.
a scene in there in the beginning because then it's 1980, but 1970s leading up to the tournament, and there's cars that are waiting in line for gasoline, and nobody can get gas because they're running out of it. That was it.
Yeah, that was literally people would wait in line.
That's the last time the Strait of Hormuz was closed.
Was it really?
Yeah. So there's your situation if it happens, maybe. I don't know if there was more dependency on their oil at that time than 4%.
Quadrupled the oil prices.
Yeah.
Quadrupled, Mo. And the funny part is, in 2008, we had $140 per barrel oil.
Yeah.
And now we're at half that.
Right.
And we got in the negatives at one point on the spot price. Remember that?
2021, was it?
Was it 2020 or 2021?
Yeah.
I don't remember.
I remember when commodities were negative.
Yeah, remember that? That was nuts. Right before the miracle, in 1979, the Shah of Iran was overthrown. And as Iranian oil exports collapsed, global supply dropped by just 4 or 5%, but prices still more than doubled. And guys, that 1970s was the start of these small cars, remember?
Yeah.
Like every car was like 5 or 6 miles per gallon, something absurd. And then it was like, hey, it's the oil crisis. We got to make smaller cars. And that's when Japan came in and started kicking everybody's butt.
Yeah.
And again, world had inflation, economic slowdown. Guys, these small supply disruptions can cause massive oil price spikes. But we got to remember, are they permanent or are they temporary? We on this channel are trying to talk about, okay, what's going to drive the long-term prices here? Iran and this fight could become the spark in the room filled with gasoline. Obviously, no pun intended with the gas and oil prices. But if that causes the explosion, there will be a sudden rush to value. And right now, the market is not screaming value. The market is screaming overvaluation. And I say it in almost every video now. Mo, it's amazing to me. We talk about valuation, people think we're crazy. But then we talk about these random one-off incidences that occur, and we've had tons of these things.
Oh my God.
And people are so worried about that.
Yeah.
And for us, we're like, listen, is it going to generate $1? What for the rest of my life? What is that worth to me? Because every investment is the present value of all future cash flows. And guys, if you're new to our channel, we repeat this over and over. The hard part is we don't know what the future will hold. I don't know what's going to happen with Iran. And guys, those stories are still in the news, but not nearly as prevalent.
They're not dominating.
And by the way, with oil prices skyrocketing, that will lead to more inflationary things if that happens. Guys, you got to remember, oil is used in far more than just gasoline for cars. It's used in every product. All this plastic has oil in it.
Everything.
It's amazing that people don't realize that.
Yeah.
We are reliant on oil no matter what. Even if we got rid of every car in the world that uses oil, uses gasoline,
all your clothes,
everything has oil in it. It's going to be a necessity for a long period of time. So I get it. The fear videos are out there saying this is going to be terrible. This is going to be, and we do a lot of that in our titles and in our images to get the attention, but then to teach the right lesson. The right lesson here is very, very simple. Every investment is the present value of all future cash flows. We have these 5 tenets of principle-driven investing that every investor we believe needs to understand, no matter if you're a beginner, no matter if you're middle, or you're an advanced person. We all have to get on the same foundation to have the same conversations. I don't care what level you are. Guys, if some of you guys consider me an expert, I still repeat these tenets every single day. If some of you guys consider me a beginner, I still repeat these tenets every single day. Because even Warren Buffett and Charlie Munger always said, the more you overcomplicate something, the worse you're going to do. And we've seen that time and time and time again. You've got to sit there and stick to the right fundamentals. So, no matter what level of investing you're at, I want us all to be speaking the same language. So download our 5 tenets of principle-driven investing. They're so important. They're so simple. Trust me when I say this, guys. You want simple. Simple is the way you're going to do better in life in investing. So make sure you download it if you're going to be watching our channel for the long run, because I want to make sure that when you see the things I say and hear the things I say, that we're speaking the same language. When the world gets unstable, governments do very drastic things that can affect government contractors, oil prices, all these things. The question is, are they long-term permanent or are they temporary? I like to think in terms of long-term. I like to think that way. Mo and I like buying companies. We sit there and say, where's this company going to be in 20 years? And it's not, Mo, whenever we do that, we don't sit there and say, what's the exact revenue going to be? What's the exact profit? What do we think?
more revenue, more profit.
Yes. Is it going to be more or less than today? And if it's more, I sit there and say, okay, can I pay a reasonable price today that will give me a good return on my money for that potential growth in the future? That's it. Unfortunately, a lot of companies today are selling at levels that require the best possible outcomes, and a lot of times, Mo, unreasonable outcomes. Yeah. That's the issue. Now, guys, with all of this said, if this escalates to another 20-year war, I think there will be effects on oil, steel, silver, gold. There will be a lot of opportunities in all of this. I hope it doesn't become another 20-year war. Guys, we're fighting inflation. One of the biggest things we have to fight in inflation is our deficit spending and our debt levels. Another 20-year war will cost us trillions and trillions of dollars, and I don't think it's worth it. So guys, I really hope if you're new to the channel, that you're gonna stick around and talk about things and the things we said make sense. And for those of you who've been around for a long time, I appreciate it. Thank you for the support. Take care.